TFNN.
Welcome, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us, folks. Hope everybody had a great weekend, safe weekend. Dow right now is down 14. Nasdaq's off 17. S&Ps are off 5. We got gold down 1070. Silver's off 65. Bonds are up 5 pennies. And someone's taking a bite out of Apple this morning. I think Microsoft's taking a bite out of Apple.
Is that? Oh, you think that? Okay.
Yeah.
So the deal with Barnes & Noble, the $300 million? And,
the deal with Barnes & Noble.
Okay.
And that's going to put firepower behind the Nook. And they're going after, what they're going after, folks, is that they're going after the institutional college market. That's what that's all about.
Okay.
Yeah.
So they're going to finally bring down the cost of books in colleges?
Oh, no.
I got three.
No,
okay.
oh, no,
I got three kids in college.
No.
And what you pay for books, folks, it is insane.
It is insane.
I mean, you're like...
It's a total ripoff. No.
Oh, one of the biggest out there.
Right. Yeah, no, they're not going to bring down the cost.
No, okay.
They're just going to collect more. But with Microsoft behind them, with the Nook and Microsoft, even David White, our technology expert, on Friday, he was bringing up that we have Windows 7 coming out.
Yes.
And so what they figure is that the combination is going to be a powerful combination to get into those institutions.
Okay.
And of course Apple, is already in there, but they wanted to be in there a lot heavier. Windows 8. Sorry, Windows 8. Yeah. So, and when you're in that gap, folks, bottom line, Microsoft's in that gap. I mean,
Apple's in the gap, yeah.
That gap's going to get filled.
Well, I got inside that gap on Friday.
And that's an intense.
That's underneath it.
Yeah, and that's an intense gap, man. Holy cow! You're talking about.
No, it is.
From the top to the bottom. The bottom of the top is 606, and the top is 567. And here we come. So.
Yeah. Interesting.
Yeah. No. Listen. I mean, it's. There's always something there, isn't there? You know?
Well, what is interesting also. So take a look at Apple. Having now the market's relatively flat.
Yeah, it is.
Okay.
Yeah.
Pretty calm right now. But if you went over to the IBD 50,
look at that thing getting smoked.
It's pretty red.
Smoke them if you have them.
Well,
I mean,
there's only so of the IBD 50, you've got 2, 4, 6, 8, maybe 9 stocks that are in green, and a couple of those are by pennies.
Right.
You got Dollar Tree, and nickel. Alexion, 14 cents. Nu Skin, which was getting crushed last week, down up 10 cents. So that which is up is not anything substantial.
No, that's a big heads up too.
Yeah, which is I was when I switched over to that set of stocks.
Yeah.
It's all, the Dow was, not the Dow, but just simply the rest of the market was relatively flat. I was pretty surprised to see that.
Yeah, no doubt. Because you should, that screen,
that's right.
Well, actually, every single one of them, I'm looking at, is that 50 stocks there?
Yeah. So,
every one of them's red. Okay, we get 10 green by pennies.
Yeah.
Pretty intense.
Yeah, I mean, the biggest one is Francescus Holdings, FRN. They're up $1.70.
Okay.
But otherwise, on the downside, you got Apple down $12. You got Pay, which is Verifone Systems. They're off $5.
Right.
Chipotle, I can't still pronounce the name of that thing. Down $5.
Hey, listen, you got to go to the Tom O'Brien School of English. Then you never have to worry about that.
Good. Okay, you're exactly right. I love it.
If we go over to Europe now, folks, Europe has some problems for sure. Spain is down, another 1.5 out here today.
Yeah.
That's going to go after its lows. The DAX down slightly. The FTSE's down slightly. They're all doing ABC structures on the way down. Now, that's on a technical basis. Now, on a fundamental basis, what you have is this. Within a week, you had the UK go into a double-dip recession last week.
Yes.
This morning, Spain goes into one, okay? You're going to see these things fall like candle pins, folks. Boom, 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 all the way down the line. Because the bottom line is that they just don't have traction. And what hasn't hit the market yet is the banks took that money from the ECB and they bought their own sovereign debt, and that's like tripling down. And that's a big, big problem. No two ways about it, man.
Yeah.
So they hit gold out here this morning, so it's going to get interesting here. And they hit it, and they hit it good, folks. When that first sell out here, you talk about a sell. Look at that thing.
Sure did.
16,000 contracts.
Yeah.
16,000 contracts, folks. That's bang. You know, someone
Yeah,
hit that.
840. Yeah.
Oh yeah, no, they hit it good,
Wow.
man. And isn't that wild?
Someone needed cash.
They took it from 1659, folks, to 1645 in a split second.
They did.
Yeah, they just took it all the way down. So we'll see where last week it wants to get higher, but what you have is that you still have 5 lower highs from
wants
February,
to get higher, meaning
4 lower
gold?
lows. It's trying to,
yeah,
right? But you can't. There's too many sellers. You know, and what you had last week, also on a fundamental basis in gold, is this: you had the largest holiday,
in India, right?
In India.
Yeah.
Well, you know what? The demand was anemic, flat out. That's the end. This week, we have China and Japan closed till Wednesday.
Yeah.
So that just means less selling days, folks. So you can't expect it, that it's going to go anywhere right now. Let's go up to Rick in British Columbia. Hey, Rick, what's going on?
How you doing?
We're doing great, man. You have a good weekend?
Yeah, really good, thanks.
So, hey, what's the weather like up there right now?
Actually, it's been fairly decent, but today's not a good one. 6 overnight and a high of 6 during the day. But we're Celsius.
Celsius. Yeah.
So
that's 36, yeah, right.
Yeah.
Well, 38, yeah.
If you want to figure out Celsius, a guy told me when we changed over in 1970 or so, but for every 5 Celsius, you take away 9 Fahrenheit.
Can I just add 32, too? I think that's what you can do, right?
Minus 40 is minus 40.
Yeah.
That's 72 away from 32.
Well, I'd love to visit you in the summer and go fishing, but in the winter, all right now, I don't want to visit you.
Hey, our manager of McDonald's here, he went to Orlando, and I didn't say much, but I'm thinking, who in their right mind wouldn't you want to go to a coastal city, especially if you live kind of in the north?
Oh, you got to go visit the theme parks.
Yeah, all the theme parks in Orlando. I mean, it's Fantasyville there.
That's right. They do have children, so that explains that.
Big time. And it's great.
Yeah.
I mean, it's...
Yep. Hey, Tom, put a weekly on the IWM a minute, and check out the real price, the high of the real price, 71.41. And like Bud used to always say, you can look and see head and shoulder patterns all over if you look hard enough, but it sure looks like a nice head and shoulder top right now on the IWM.
Oh, look at how pretty that is. Interesting. Hey, we're going to start, instead of calling you BGO man, we're going to call you, see, folks, here, let's give you the history. This is pretty cool. We'll give you the history of TFNN with Rick. He was BGO man remember BGO, folks, that was one of the first gold stocks we got. It was at like 27 cents, then 52 cents, and then it got taken over by Ken Ross at, $5 or $6, which is a beautiful thing. $6. Then he became Doji man. Now you're going to be Head and Shoulders man.
Yeah, well, you never know.
I like that.
We might find a doji halfway down to that real price, and then we got a Head and Shoulder and a doji.
I like that.
But anyway, and I keep looking at that FXE, and I don't know if the euro volume, Tom, you seem to get that pretty good, but that FXE at the lows around, 122, 121, somewhere down in there a year or two ago. I mean, we got to go test those lows. Does the euro chart look the same way? FXE is the ETF, of course, for the euro.
Yeah, no, I'm with you. I see what he's looking at. So we're at 131. He's looking all the way down at 125, which is sticking out like a sore thumb.
Yeah, but even lower, like the 122 back in the day, that's got big volume down on a monthly as well.
Yeah. Well, if we just, it's a monster. Oh, man, look at that. Yeah, and you haven't had a retracement off it either. The first one was a nice one in 2011, but the second one's nothing.
How does the euro look, Tom? Does that...
No, to me, the dollar wants to go, man. I can tell you that technically the dollar wants to go, folks, but fundamentally what you have is that the amount of dollar bonds that are out there, the amount of, when you really start understanding what's driving it, it basically, and what ends up happening is this. See, the more times that it rejects its lows, which it has done continually, particularly when it gets so close, like last Friday, I went right into it, right? They couldn't jam it down. If you can't jam it down, bottom line is it's going to try to go topside. So,
yep. Thanks, guys. You have a good day.
Have a great one, man. Have a safe one. This dollar is a trip. There's no two ways about it. And it's like, and what this is about, folks, more than anything, is that you got to remember something. What is the competition of the dollar?
Right.
You can definitely lay out a case that, hey, listen, we got debt, we get this, we get that, but what is the competition? That's all the currencies go by. Is who are you competing with? And you know what? Bottom line is that you're competing with the euro. Oh, really? Give me a break. That doesn't fly. Let's go to Tom in Pittsburgh. Hey, Tom, what's going on?
Hey, Tom, how's everything?
It's going great, man. You having a good day out there?
Yeah, finally getting some warm weather. I'm in my shorts and flip-flops.
That's a beautiful thing.
That's like us every day.
Yeah, totally.
I know. It's like being back in Florida.
Yeah.
Hey, one thing I wanted to tell you is I won't be calling you for hopefully a good long time.
Oh, yeah?
Well, you know, I've been out of work. I start a new job tomorrow.
Oh, that's awesome, man.
Good for you.
It's I know last summer I got downsized, and then I think I told you back in the, earlier in the year when you were asking people what their experiences are in the economy.
Yes.
So during the interim, last fall, I got an offer with a startup company, and that lasted 2 months. They started letting people go at the end of November. So the past 5 months, I've been hitting the streets looking and looking and looking.
Okay.
I got to tell you, I got friends in Tampa. I got friends up here. About half of them are unemployed. But I can tell you that this new job I got is great, pays good, and
sweet.
I can walk to work.
Wow. Oh, you're going to be psyched. You're going to save so much time, man. That is huge.
I know, and the thing is that right down the street's the YMCA, so, I can get up early in the morning, do a workout,
Yep.
walk to work, save money on gas.
And what exactly are you going to do?
Well, what it is, it's a software company. My background has been in IT sales.
Okay. Nice.
So with this company, interestingly enough, they deal with SCADA. I don't know if you're familiar with SCADA.
I'm not.
It's supervisory control, data acquisition. It's used primarily by utilities.
Cool.
And I hear the music.
That's all right. You stay right there.
All right.
Get that pitch going. I want you to sell me that software right now.
I love it. Okay, I love it.
Steve Rhodes, Tom O'Brien. We get Tom from Pittsburgh. He's going to be out there growling and prowling, folks. All those utility companies. That's a beautiful thing. We have the Dow down 9, NASDAQ off 17, S&P's off 4. You stay right there, folks. We're coming right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. We get the Dow down 6, NASDAQ off 16, S&Ps are off 4. Now, inside the NASDAQ, let's just look at the NASDAQ for a second. We're talking with Tom from Pittsburgh. The NASDAQ's going to get interesting here, folks, and the reason being is that the composite's back slightly, but that's all it's back is slightly right now. And if it can't get any traction going, it's got some traction. 319 million, that's not bad. So we're going to see. It's because it's going to be all about Apple today. Well, you get all those IBD stocks. They're getting hammered too, but we got a long day coming at us. We're talking with Tom from Pittsburgh, and it's a beautiful thing. That tiger's going to be out there growling and prowling in the software business again. Yeah, you're going to be psyched, aren't you?
Yeah, and here's the deal. I mean, to give you a brief overview of what SCADA does.
Yeah.
Like, for example, what it is, it's basically a 24/7 operation.
Yep.
And what they do is they monitor all the systems and so on. If it's an electrical utility, they're monitoring the electrical grid. And that's where I have some experience. This is going to be for, like, water utilities.
Okay.
This particular product that I'll be selling. And our primary market is going to be Florida and East Texas.
Agricultural?
Excuse me?
Is it inside the agricultural business, right?
No. It's the municipality.
Okay, cool, man.
Yeah, like, for example, Pasco.
Yeah, no, I'm with you. I understand what you're saying. Yeah.
Yeah, so it's basically a hardware software solution. What it does, it can just gather more data points than what they currently have with their PLCs, and on top of that, the problem is with Florida, especially as you know, living down there, and you come up on hurricane season. The problem is that you have pumps all over the place. They're electrical pumps. Well, if the pumps go down, and I remember when I lived down there, when the pumps would go down, it would basically, you'd see the red light on the pumps go off, and then you'd hear this, god-awful noise, which was telling you, the pumps are down, need servicing, because as you know, Florida's flat, and if you don't get those things up and running, you're going to have sewage in the streets.
Yeah.
So, basically what we do, we come in and with our hardware software solution, we reduce the call out, so it's less maintenance. On top of that, you verify the quality of the power, the electricity,
right,
things of that nature. It's just basically for optimization, of course. And also,
listen, I understand what you're saying. That's why I asked you about agriculture, because I know down in Florida, folks, and same with Texas, there's a huge amount of bread in the water business, period. Whether it's the valve part of it, whether the softening part of it, whether it's the saving part of it, because there's such big, we use so much water, basically,
Mm-hmm.
That's a beautiful thing, brother.
Yeah, so it's great. So I'm going to have
have a good first day of work tomorrow.
Hey, listen, we hope we never hear from you again.
Well, I hope so,
I'm
too.
only kidding. You're gonna have to cheat and call in one of these days. I want you to call in when you get that big kahuna on the sign-in.
That's right. Yeah.
All right, I'll do that. Hey, by the way, I wanted to call in about Jaguar.
Yeah, don't buy it.
Don't buy it?
No,
Yet?
you get Jaguar. What you need, folks, this is Jaguar mining. The lows are 270, the highs 818. You need a sign of strength first, man. This thing has gone straight down from $8 to 230. But you know what? Do not step in, man. You definitely need a sign of strength first.
All right. Okay.
Okay, man.
Deal. All right, thanks.
Have a great one. Have a safe one. And if we look at Jaguar, folks, what it's done is this, and this is why you always wait. Okay, Jaguar got a takeover bid, but bottom line is that we had the patience. We waited to see what happens when it comes back. Well, it was coming back with too much volume. Don't touch it, right? We didn't touch it. What you have now is this. Jaguar broke lower with monster volume.
It did.
56 million shares on a monthly versus 36. That's saying, number one, you're going to get down to 185, and you never know. I mean, it could be worse than that. So,
yeah.
Bottom line, this needs a huge sign of strength first, and you can, after a sign of strength, folks, you just take your time and you buy the retracement after the sign of strength.
Yeah, even after it gets to the $1.85. Let's just that comes on the swing point.
Yeah. If there's not a sign of strength, you do not buy it. Period. It's hard to believe that you can have something that's going down this much, but you know what? That's what happens.
Yeah.
And if there's sellers, there continue to be sellers. Well, you know what? That's all that matters.
Yeah.
You need a buyer. You need a buyer. That's the bottom line.
And you don't have volume up at the top.
No.
That's the other problem.
Right. And if we go back to AEM, an Eco, that's something that you're going to want to buy on a retracement. That went from $32 last week to 38. Just have some patience. That will come back, folks. This is Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us, folks. You stay right there. We're going to be coming right back. We have the Dow right now up 12, Nasdaq up 17, down. So used to saying up, down 12, down 17. S&Ps are down 4. We're going to be right back.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing, and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, we get the Dow down 20, NASDAQ off 20, S&Ps are off 6.5. If we go over to Europe and we take a look at Europe, and Europe, folks, you want to keep your head wrapped around. They're trying to hold it up, and they're holding it up by the strings.
Yeah.
But bottom line is that when you have two countries that are in a double-dip recession, number one, and you got an ABC structure on the way down happening, it's like, okay, this thing's going to come home to roost. And, of course, we're coming into May tomorrow, and the real key is going to be, I suspect what already has happened is that they sold in April. It looks like the highs are generated in April this year. So actually, is it April? Is it?
Yeah, it's
April 2nd.
April. Yeah, April 2nd.
Hey, you know what's wild? Oh, so check this out. Let's bring this back. You know what? I think it was May 2nd last year.
Oh, it was May 2nd.
It was, wasn't it?
It was May 2nd.
Okay.
Yeah. It was absolutely May 2nd.
There you go. Well, we talk about things that are going faster anyway.
That's right. That's one.
Yeah, right.
The pound, has still been acting strong.
Which would make sense. No, that makes sense because so watch what happens there though. The euro is going to implode.
Okay.
So it's about competition, right?
Yeah.
They were smart enough. Of course, they used to rule the world at one point. Why would they give up their money? That'd be insane. Okay. Bottom line, if you're over there, you'd probably go to the pound.
Yeah. And that's certainly what it's showing.
Yeah. Yeah. That's pretty cool, actually.
And it shows the pounds wants to get up into, looks like about $1.63 and change, and right now trade at 162.5.
Yeah, look at that.
At a minimum.
No.
Actually, I think you want to get all the way up towards its highs going back to August.
Right.
In 2011.
Right. And that's money moving into the UK.
Yeah.
So it's, you can see from the rates alone, folks, what happens is, I brought this up before, but no one would give Germany the deal, right? Meaning lend the money. It wasn't lending them the money. It was lending them the money in euro terms, euro dollars.
Right.
Because you can get your money back, but if you're getting it back in euro dollars, well, great. Then you just blew your brains out.
Now, what is interesting is that the yen is actually setting up to give us a chance to get back in.
Yeah.
That's
cool. That's cool.
You talk about the retracement that it's doing.
I like that trade.
It's really huge. I mean, it's going to get back. It looks like may get back into the 77 range.
Yeah.
Which, I didn't spend any time this weekend looking, but I thought that they announced that they were going to be printing all kinds of money out there. And the yen has just gotten stronger.
Yeah. I didn't. We'll check that out. But the key.
I can tell you what the market, what the screen is saying is no.
Yeah. No, absolutely.
It's getting stronger.
It's getting stronger. And not only that, folks, okay, this is going to be a nice setup. This is a much longer-term setup. And when you get a retracement like this, no one's going to believe it again, which you need.
I know.
You absolutely need that.
Yeah.
What we will have, let's see, the Nikkei's closed tonight and tomorrow night. So the Nikkei also wants to pull back, and that's going to set up good old Sony. You know, Sony, you want to let Sony basically get into those lows.
Yeah.
You know, Sony has further to go into the $15 level, but let it get down there. But this little baby is setting up sweet.
I like Sony much better than the Panasonic.
No, it is. It's much better setup. So the low on Sony is 1564, and let it get in there, folks. It will probably spike it, and I love it when they spike it. Boom, goes down. Boom, comes right back up.
So earnings-wise, what do we have coming out? Anything big after the bell that you know of?
I don't.
Last week was huge for earnings releases out there.
Well, actually, let's go over to Amazon and see what the king of the jungle is doing out here, because Amazon also has a monster gap, folks, that is going to get filled.
Good point.
So it's not going to get filled today, though. So you got Amazon, folks, is up $1.49, trading at $228. And what you want to mark in your broker dealer on your broker account, folks, is put an alarm on there for about $198. $196 is the beginning of that buy. And it'll take a few months.
Yeah. So as we take a look at the chart, is there anything there that we may have missed as far as being able to have gotten in on the any signals or anything that would have gotten us in on the Amazon trade?
Not really.
That if you go back and take a look at it?
Well, what you have is this. This is, when you look at the February 1st one, okay, and I've seen this before, but I don't buy these because it didn't break the swing point, but you had big volume.
You
okay,
did.
so
absolutely.
But what does happen is you don't break the swing, it doesn't talk, walk, and squawk. Okay.
Yeah.
You know. So what you have there is that the volume was big. Now, when I talk big, it was 21 million. It's like, okay, you came back down and tested with 12 million. You came back down with 4 million.
So when you tested with 12 million, you're still saying, nah?
No, I would say that's all right, but I don't have anything on my left-hand side to gun for. That's why I wouldn't have done it. You know what I mean? Now, when you're looking at it, you certainly could say right where you're looking at there with the 198.
Okay, right.
You know, that could have went there.
Yeah.
You know, so...
But at that stage, still not having...
Just not enough,
totally tested the low.
It's not... It certainly wasn't talking enough for me.
Yeah.
You know, that when you do it on a longer basis, it's like, the 198 is out there, and you're at 179, and that still wouldn't be enough for an Amazon.
Exactly.
You know, because 20 points is nothing on Amazon.
Yeah.
You know?
Sometimes it's good just to go back and take a look at the charts and just say, hey, was there anything
go
there
back.
that you could have possibly picked up on?
I always go back. Every single time. You kidding me, man? That's how you learn, folks. So bottom line, you absolutely... That's the only reason you know what you know.
Exactly.
Right.
Yeah.
There's no doubt about that, man.
Yeah. So for me, the only, as I went back, was my hammer.
Yep.
Okay. From December 14th.
Monster hammer.
And then that got tested with lighter volume.
Yes.
You know, on the 29th. And to me, that would have been the only... To me, that would have been the place
big.
where it could set up.
No, that absolutely is big. Yeah. There's no doubt about it. Those Steve's hammer candles are big deals. There's no two ways about it. No, it is. It absolutely is, man.
Yeah, no.
There's no doubt about it.
Yeah. So volume-wise, what do we... So we're...
Right now, we're...
a little over an hour into trading.
We're banging out... Let's see. So you get 153 million in the NYSE, and you're banging 381 on the NASDAQ. The NASDAQ has some juice. 381 is some juice.
Which would make sense, because you got a lot of the IBD stocks. You got Apple.
Yeah. And, inside the 3 Qs, though, they're going to need a lot more than that. 3 Qs only have 15 million. It looks like it's building cause for little ABC down into this 66.45 level. And in the correlation, I guess 16. Well, see, in the correlation as to highs, as to pulling back, we're pulling back with volume. But you need actually heavier volume than that, because the first leg down, we came down with 81 million.
Yeah. So I think, today marks the end of the month.
Yes.
And so I think one of the bigger signals out there is going to be actually the monthly New York Stock Exchange chart.
Oh, cool.
Okay, and the reason is, folks, is because, from a monthly basis,
right,
you go from the lows in October all the way up to the high that was put in last month in March. What you see taking place right here today, and is you've got a bearish engulfing candle. Now, it's a monthly, so it's a real signal that if you get and what you need on the New York Stock Exchange is to get a close below 81.3613, and you're at 8100 right now. Most of the month it had been below that.
Wow.
Thursday and Friday's action pulled it up above that. So this morning, prior to the market open, looked like maybe it wasn't going to happen. And you don't see very many bearish engulfing candles at highs. In this case here, you're at a 0.786 retracement off of some highs. So it's just something to really pay attention to, in my opinion.
That's a huge one, man. Because what happens is that, of course, a monthly takes much longer to fold out.
Oh, yeah, big time.
And it doesn't get negated until another month.
Yeah,
exactly.
But it is something to really be cautious of. Because you can take a look at some of these candles truly as being a leading type indicator.
Yes. Particularly, Oh, that's interesting. Oh, that's going back to 2009. Oh, yeah. See, that's cool.
Yeah, that's right.
If you go back
to 2007
to 9, folks, what you have there is that is three black crows getting tested on the monthly, and that's what it loves to do. Oh man, that's it. That's the number.
Yeah,
that's the number. No, I'm telling you, folks, 3 black crows loves to get tested.
Yeah.
Now, in this particular case, 3 black crows are getting tested on the monthly, which is sick. That means that this thing is not even over. Where's my 825? Those Catholics, man. I heard those Catholics. They gave us that phone call. 825 is coming at us.
That's right.
Then everyone's going to have to go to confession.
We're going to have coffee mugs in here. They got the no more Starbucks.
Oh.
We're going to get the 825 mug.
Hey, I love it.
TFNN.
I love it. Oh man, I'm telling you.
Yeah. Now the Dow, how's the volume wise? So we'll take a look at what's going on inside the diamonds.
The diamonds. Let's take a look. See, so we have here inside the diamonds is 1.5 million. You made a high out there with 3.5 on Friday. That says it all, man. That's pretty intense. So what we do need on the way down is a dramatic increase, though. You know, so. I'd like to see 12, 13 million. He won't get it today, but as we get into 129.07, which was the downdraft of the 10th, that's what you need to get to lower price. Let's put it that way. It doesn't matter what I want.
Right. So you got IBM still trading up a little bit today, so that's helping to keep the Dow in its spot. And we know they were doing a buyback. That was coming after moving down with volume. So that's coming back up and testing the swing point?
Yeah, I'm going to put my shots on this one. I like that setup. Because you got 207.64.
Yeah.
We tested it Friday. We tested it again today. It closed underneath that. That means it wants to run to 196 again. And that's all it has to be at this point. It's a consolidation, but very well maybe an ABC down. I like that one. I tested it a few times. It's having a tough time, folks, getting into that gap. That means someone is sitting there just selling away at this particular point. And let's see if we got... So, block-wise, and it's not bad. You get enough blocks in there, man. There's 500,000 trades, cash-wise.
Yeah. So you would, in this case here, you wouldn't wait for the test of the April 3rd low? You don't think it'll get up there? The swing point?
I don't.
Yeah.
Not if it's today, no, because you tested 207.64. You had volume of 6 million shares. You tested that Friday with 3.3. Now, what I would like to see is this. I want to see less than 3.3 today.
Okay.
So that means even weaker.
Okay.
Which would be hard to do, by the way, folks, okay? But you get less than that. That's showing weaker today than Friday. Friday was at less than half that volume. That's saying wants to go south.
So and you'd still just go ahead with the swing point from April 17th.
What I would do there is a bear spread, right? Right.
That's cool.
Yeah, bear spread to bring it down to 196.
Yeah. Now Caterpillar's struggling. So you got Caterpillar off $1.31 this morning. The second weighting inside the Dow.
Right. And you can
What
see
is she doing?
That sell on Caterpillar is huge. I mean, they sold Caterpillar down nasty last Wednesday, and whoever was selling that down, they're not going to stop. You know, that's when you sell down. They sold down 15 million shares, folks. And you see how it pops out of nowhere?
Yeah.
Well, you know, it's like boom. It's like okay.
Yes.
You know, that's just probably the first or second sell. You know, and.
Now, is that going against over there on the left there, right in there? What's that?
Yeah, that'd be high volume high.
Okay.
114. Well, we're looking at on January 26th, folks. You had 114 high volume high. Well, you know what? It gets tested with nothing. It gets tested with 4 million shares versus 18. And then what happens? Picture at some point. The volume has to stop on the way up and the way down.
For sure.
Because it's impossible to keep going.
Yeah.
What you look for is this, as to highs. What you look for is you say, okay, now, did we have a sell on the way down? Well, we sure did. And that was the first one.
Yeah. Was that March 6th or?
March 6th.
Okay.
12 million on the way down. So how do you decipher what it wants to do? What you wait for, folks, is the next counter trend bounce. It goes up. Oh, because that won 5 million. Yeah. That's it. It's over. Now, you tested the high, had lighter volume, you come off the high with volume, go back up with lighter volume, next leg down, higher volume, 10 million. Next leg up, 4 million. Next leg down, 15 million. Yeah. Screaming. Now it's screaming, baby.
That first counter trend bounce.
Yeah.
Okay. You know, and so when you're taking a look at that, where are you going to go ahead and benchmark that against? So on that first counter trend bounce.
It's right against the high volume high.
Okay.
Yeah. So, I'm sorry, if you're in the car, folks, we're going against the high volume high. So the first counter trend bounce went from March 16th, went to 114.25 with 5 million. Well, you know what? You were going 114. Look at that, sick.
Yeah. So
okay.
in that case there, I mean, you were going against that versus the actual swing point high that was made out
That's
there.
right.
Because you're just saying, hey, wait, here's where all the information is.
Right.
Because that's
after it already come down to.
Yeah.
You know, and the sickest part is that you got over it by 25 cents and you closed under it.
With volume, because you were going 18 million was going against 5.7. Yeah. 4.7 the following trade.
Where's the supply and demand curve, folks? That's what you always want to know. The supply and demand curve. Where is it? Steve Rhodes, Tom O'Brien, we appreciate you growling and prowling out here with us. We get the Dow down 31 right now. NASDAQ off 19. S&Ps are off 6.5. We get gold down 6. Silver's off 64. We're going to be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tom O'Brien, Steve Rhodes. We appreciate you growling and prowling out here with us. Right now, you get the Dow down 38, NASDAQ off 20, S&Ps are off 7. Over in Europe, they got a little acceleration happening here in Europe. Let's see. Well, not that bad. Yeah, slightly. You get the FTSE's off 0.7%. The DAX is down 0.3%. The IBEX 35 is trying to get away from the lows, and it's having a real tough time doing it. They just keep selling that baby down. That 6,700 wants to get whacked. Right now we're at 7,000. So they get some problems.
They got problems in Spain.
They get problems, man. No two ways about it.
And it'll somehow trickle over to us.
Well, it's going to absolutely. It's going to trickle. Well, you know what it is. This is where, folks, disclosure in the marketplace is just non-existent inside these banks, and it still is.
Yeah.
You know, I mean, they're just holding toxic assets, and they allowed them to buy them again. And the amazing part is that there's absolutely no common sense. There's absolutely no. I mean, but you know, it blows my mind because it's like, hold it, what is their thinking?
Yeah.
Okay. How, and I know it's a double down, triple down type of thinking.
You're talking about Europe and reloading up with the banks and then just buy the debt.
Yeah.
Yeah.
Right. Reload them up, buy it, and you get bureaucrats. You get bureaucrats running the deal, and that's, folks, that's a system for disaster, man.
Yeah.
Period.
What we ought to do is a study on just how much cash our banks, like you were taking a look at Goldman Sachs.
Yes.
And you're saying, hey, wait a minute here. Here's a
why are they saving all that back?
Divergence,
yeah, why
right?
are they saving all that cash? They're saving that cash, folks, because last time
they're expecting
when we
a
went,
rainy day.
That's right. When we went downtown, they didn't have any cash to buy anything, and this time, Goldman in particular is going to have plenty of cash to buy cheap assets.
Yeah. Not only do they not have cash, they went out and borrowed from Warren.
Yeah, exactly. I know.
We got a nice deal.
Oh yeah.
Yeah, I'll loan it to you.
10%.
On my terms and conditions.
10% preferred. Nothing like it with warrants. That's a nice deal. That is a nice deal, no doubt about it. Let's take a look at some of the volumes out here and see what we have. So in the NYSE, you're shooting out at 173, which is really light volume. The NASDAQ, though, the NASDAQ, folks, is leading again. 436 million. That's a lot of, that's not a lot of volume, but that's saying the NASDAQ's going to do 1.9. That'll be a confirmation. The bottom line is that you got lower lows coming at you. The last time we did 1.9, 19th, 20th of April, you're going downtown. We just went uptown with 1.7. Bottom line, where's that supply and demand curve? Boom, downtown. Hey, what can you do? Apple's leading the charge. You know,
Apple is.
And let's see what's she's going to try to get after a small B point. Volume's not that tough. On an intraday basis, folks, that 588 is not going to be hard to take out because we only did 1.1 million on a 10-minute, and when they're going up, you're only doing 495,000. That's problematic in itself. This is going to go after it again. And once you're into that gap, it's like a what? It's like a big magnet.
Yeah, so, when we were taking a look at Apple as it was making its way up,
yes,
it continued to make day after day, take out its B point or take out its swing point with volume.
Right.
Yeah, on the 10-minute chart.
Yes.
So would you say that it's important to be watching that on the way down as well?
Oh, yeah. There's no doubt.
Yeah.
Particularly because you want to know that, is this the high of Apple, or is it just a correction? And what the neat thing is, the first leg down was monster volume. So, yes, it's how you come back into that low. We get a high volume low right now at 555, 38 million. You come in with lighter volume, that's consolidation.
Yeah.
Come in there with, if ABC structure down, forget it, man. See you, don't want to be you. And I think their problem is going to be Microsoft.
Yeah. Now you have a Kindle too, or
I have a Kindle.
Yeah.
I have a
Which
Kindle.
one do you like better?
I use a Kindle for reading. I use the
iPad
for real estate.
Yeah. Cool.
You stay right there, folks. We're going up to Newton, Massachusetts. Basil Chapman's going to be growling and prowling you for the next couple hours. And back here at 3 o'clock this afternoon, David White and myself at 4 to 6. Have a great one.
Take care, folks.